Hello and welcome to this episode of Mic'd Up with iCM. I'm Pete Seyler, a member of the business development team here at iCM, and I'll be joined today by Ryan Lehman, iCM's Director of Investments. Ryan, thanks for joining us.
Happy to be here, Pete.
So as a follow-up to a recent series of emails that we've sent out, we've gotten a lot of feedback that have described TICE Alpha Opportunities suite of portfolios as something truly unique. You mind talking about some of the aspects of TICE Alpha Ops that make it unique?
Yeah, sure. So I think there are really three aspects of TAL that are going to make it different than your traditional strategies. So number one is going to be flexibility. So not only are we able to seek out the best opportunities across the globe, but we can also access them through a variety of investment vehicles. So that ranges from ETFs to open-end mutual funds to closed-end funds. Second would be the potential to provide investors with an attractive level of income. So this is largely going to come from those investments in closed-end funds. So closed-end funds are typically designed to provide an attractive yield, and that yield is only going to be further enhanced when you're able to buy those funds at a discount. And then lastly, and I think the most important aspect of TAL, is the way that it combines short-term and long-term tactical strategies. And the goal here is really to provide competitive returns across a variety of market environments. And how we really accomplish that is we're pairing a shorter-term tactical closed-end fund strategy, which is basically an asset-weighted version of our flagship TICE strategy, with a longer-term portfolio of high-conviction assets, which essentially carves out the best ideas from our ETF and mutual fund models.
All right, so that's a really good point. So let's drill down on the last point that you made. Can you give us a few instances of that long-term and short-term diversification in practical application or in practice?
Yeah, absolutely. So thinking about the short-term first, or our tactical closed-end fund strategy. So this was really the key driver of TAL's performance in 2020 and 2021. So following that volatility that was caused by the COVID pandemic, we were really able to find an abundance of opportunities in the closed-end fund space. In fact, if we were to look back, our average holding was actually trading at a discount of more than 15% to NAV, or 85 cents on the dollar. Now, as markets recovered, volatility subsided, these discounts narrowed back toward NAV pretty quickly, and this allowed us to realize some pretty sizable gains as we tactically allocated those assets away from closed-end funds and then back into ETFs. Now, on the flip side of that, our long-term tactical strategy provided a great deal of downside protection in that sell-off we saw in 2022. So if we look at our fixed income positioning, we held primarily short-term treasuries and emerging markets bonds. They outperformed by a pretty wide margin as those more interest rate sensitive bonds really struggled throughout the year. And then on the equity side of our high conviction portfolio, we own commodities and non-US value stocks. And if we think back, commodities were actually positive in 2022, one of the few risk assets to be positive, while non-US value stocks actually outperformed US equities by a pretty wide margin. And you put those two periods together, you end up with pretty meaningful outperformance as a whole across two very different market environments.
All right, great job kind of giving us the context looking back. So what are the best ideas for today?
Yeah, so to start with those longer-term high-conviction assets, I'll use one from the fixed income side of the portfolio first, and then one from the equity side. So on the fixed income side, we still really like those short-term U.S. Treasuries. You're currently clipping a coupon in excess of 5%, depending on where you're at on the curve, with pretty limited downside risk from here. In fact, we see some upside from a price standpoint as the shorter end of the curve, that's the area of the bond market that's likely to see the most downward pressure as rates finally do come down at some point and the curve normalizes. Then on the equity side of the portfolio, we still really do like emerging markets value stocks here. So from a valuation standpoint, it's really hard to find anything more attractive today. So if you look on a price to book basis, you're barely trading over 1. And then if we look on a PE basis, you're in the single digits based on a 10-year CAPE ratio. Compare this to U.S. stocks. U.S. stocks right now trading at a price to book of over 4 today, and they've got a CAPE ratio of near 30. Then in addition, on top of the valuation story, you're getting exposure to an undervalued basket of currencies, which could only further enhance your future returns. And then lastly, as it relates to that shorter-term tactical closed-end fund sleeve, story here is municipal bonds. So with the sell-off that happened last year and really over the last few months, discounts for muni closed-end funds, they've gapped out to some of their most attractive levels on record. At a universe level, we're currently right around 14% below NAV, or 86 cents on the dollar. This equates to a near 3 standard deviation event from a statistical standpoint. And then the funds that we actually own in our strategy are trading at discounts in excess of 15%. So similar to those levels we were able to find back during the COVID pandemic. And if you look back historically, from these levels, investors have gotten pretty sizable returns. So in some instances, we're talking about returns in excess of 25% over a subsequent 18-month period. So really a lot to be excited about in the muni closed-end fund space these days.
Sounds like it. Hey, Ryan, as always, it's great to have you. Appreciate you jumping in and joining us today. As always, if you do have any questions about the TICE Alpha Opportunities strategy that we discussed today, or would like to submit a question or a topic for a future Mic'd Up, please reach out to us at info@icm-invest.com or by phone at 888-426-4689. Thank you for joining us.